All right, let's get right into it. If you look past all the daily noise and the headlines, there are some really powerful shifts happening underneath the surface of the crypto market. And honestly, understanding these is the key to figuring out where we could be going next.
Right now, all eyes are on this one number, $78,000. And look, this isn't just some random price. A lot of analysts are calling it the true market mean. It's this huge psychological and technical line in the sand, and right now, Bitcoin is in a total war to make it stick as support.
So you have to ask, why is this fight happening right here, right now? Well, what we're actually seeing is a massive tug of war. On one side, you have these incredibly bullish developments, and on the other, you've got some pretty serious hidden risks that all the professional investors are keeping a very close eye on.
So let's start with the bull case, because you gotta admit it is a powerful one. This isn't just about number go up anymore. The whole argument is that the crypto market is, well, it's finally growing up. And this perfectly captures the massive story shift that's underway. For what feels like forever, traditional finance just wrote Bitcoin off as a wild, volatile gamble. But now, we're seeing this huge rebranding. The big players are starting to talk about it like a sophisticated asset, something that can actually generate income for a serious portfolio.
And here is proof positive. Goldman Sachs just rolled out a new Bitcoin fund, but listen to how they're talking about it. They're aiming this straight at financial advisors who want yield, not just a moonshot. They're using a classic Wall Street strategy called covered calls to generate a steady income stream. This is a game changer because it's designed to pull in what they call stickier capital, long-term money that isn't going to panic and sell at the first dip.
On top of all that, you've got this major tailwind coming from the broader economy. Analysts over at UBS are predicting the Federal Reserve is going to cut interest rates by 50 basis points, that's 0.5%, at their big meeting at the end of April.
And what happens when the Fed cuts rates? It creates what we call a risk-on feeling in the market. When money is cheaper to borrow, investors get a lot more adventurous. They start moving cash into assets that have more growth potential, and that, of course, includes crypto. This whole vibe is being boosted by comments from Fed Governor Myron, who seems to be brushing off worries about inflation for now.
And it's not just the money side of things. The actual technology, the plumbing of the system is getting a serious upgrade. You've got companies like Satochip bringing their open-source hardware wallets to the US. Now, this isn't just some new toy. It tells us that users are getting smarter and they're demanding more transparent, more secure ways to actually hold their own crypto. That's a huge sign of a maturing market.
Okay, but that is only half the story. Now we have to look at the other side of this tug of war. Because underneath all that sunny, bullish news, there are some pretty significant threats bubbling up that could absolutely put the brakes on this rally.
The bear case really boils down to two different kinds of risk. First, you've got supply risk. Think of it as a giant wave of Bitcoin potentially hitting the market all at once. And second, you have systemic risk, which is way more sneaky. It's about hidden dangers from the inside that could threaten the very platforms we rely on.
So for supply risk, you don't have to look any further than what people are calling the German overhang. There's this old court case involving a pirate movie website called Movie2K, and the bottom line is it could end with the German government suddenly controlling 57,000 Bitcoin. Nobody has a clue if or when they might sell it. That creates this huge, dark cloud of uncertainty hanging over the market.
Now, for systemic risk, and this story is genuinely unsettling. A project funded by the Ethereum Foundation itself, called the Ketman Project, just found about 100 North Korean IT workers who have gone deep undercover, getting hired as regular employees inside 53 different crypto companies. This isn't some external hack. This is a long-term insider threat. These are people on the inside who could sabotage these platforms from within. It's a huge deal.
So here's the bottom line. The market is trying to figure all of this out at the same time. You have these incredibly strong bullish signals, like institutional adoption, crashing right into these very scary, very real bearish risks of government selling and hidden spies.
And this table just lays it all out perfectly, doesn't it? On the left, you've got institutional money and Fed rate cuts pulling the price up. On the right, you've got potential government sell-offs and massive security threats pulling it right back down. This is exactly why the price seems stuck. The market is literally caught in the middle of a tug of war.
You know, even the good news isn't always simple. Let's take Ripple's new stablecoin. Historically, Japan has been a huge market for XRP. But a new survey from Nomura shows that Japanese institutions, they don't really trust it. They overwhelmingly prefer stablecoins from their own giant domestic megabanks. It just goes to show you that even when adoption is happening, it can hit these real-world walls of friction and trust.
So You see why the market feels kind of stuck, right? It's waiting for a clear signal, something that can finally break this stalemate. With the board all set, what are the key things to watch that could finally decide whether the bulls or the bears win this thing?
All right, so here's your roadmap. 3 things to watch. First, that key level, 78,500. Can the bulls defend it and turn it into a solid floor? Second, keep your eyes peeled for this week's U.S. retails data. If the numbers are weak, it actually helps the case for the Fed to cut rates. And third, if those first 2 things line up, the next big prize, the next target on the map, is around $82,500.
And all of this leaves us with the one massive question that hangs over everything. We are seeing institutions like Goldman Sachs build real, long-term products and trust in this space. But at the exact same time, we're uncovering these deep, systemic security risks. So the billion-dollar question for the future of this market is pretty simple. In this epic tug-of-war, which side is going to pull harder?